It is 11:08 a.m. Pacific Standard Time. It's the third day of December 2025. This is episode 1222 of Bitcoin And. What kind of news do we got today? Well, we went past $93,000 per Bitcoin, so there seems to be something going on in the markets, and apparently it comes down to an ADP weak jobs report, because we're also seeing some flighty prices going on in the equity markets. Dow is up right now like 410 points. And what this means is that everybody's hoping for a rate cut. So there's that as the macro. But in the UK, it appears that Bitcoin is going to be categorized as a brand new property. I promise you I'll get into that one. And then staying in Europe, we've got 10 banks that want to launch a stable coin. They're going to do it together. They're going to do it separately. I'll tell you all about it. And then we got some Binance news that I think is extraordinarily weird. It's just weird. And maybe it's not in the business world at that scale. I don't know. But honestly, man, the hackles on my neck rose up pretty much instantly when I read this one. And then, they caught somebody defrauding some people in UK, or at least defrauding a company. I promise you, I will tell you about that one. NASDAQ wants to supersize its trading limits. A mining/energy company is mining with landfill gas, but this time in Colombia. So we'll get into that one. And Strategy is fighting back against this whole MSCI business. And then we're going to go talk about Anthropic and their IPO prep. So that should cover us for today. Let's go across the pond, across the great Atlantic to the UK, where they have passed a bill formally recognizing crypto as a new category of property. Micah Zimmerman starts us out with Bitcoin Magazine. The United Kingdom has officially written crypto into its legal framework as a distinct form of property. On Tuesday, the Property Act 2025 received royal assent from His Majesty King Charles III, completing its passage through Parliament and creating a third legally recognized category of property specifically for digital assets. The act passed in both houses without any amendments, which is also odd. The new classification places assets such as Bitcoin, stablecoins, and, God forbid, NFTs into a bucket separate from traditional, quote, things in possession, like physical objects, or, quote, things in action, like contractual rights. Policymakers say the reform was needed to modernize property law for the new digital era. Quote, a third category of property now exists, and it finally gives legal protections to the sats you hold, said Susie Ward, CEO of Bitcoin Policy UK. Her group's chief policy officer, Freddie New, called the act potentially, quote, the biggest change in English property law since the Middle Ages. Probably more like the Dark Ages, but whatever. The reform stems from a 2023 recommendation by the Law Commission, which argued that digital assets did not fit neatly into existing legal categories. The bill was introduced into the House of Lords September 2024 before moving swiftly through Parliament. While UK courts had already been treating crypto as property in rulings over the past several years, the approach relied on case-by-case judgments. Trade Association Crypto UK said that codifying the principle in statute offers much clearer legal pathways in matters involving theft, fraud, insolvency, and estate planning. Quote, this gives digital assets a much clearer legal footing, especially for things like proving ownership, recovering stolen assets, and handling them in insolvency or estate cases, Crypto UK said in a statement. Lawmakers also framed the legislation as a boost to consumer and investor protections. Quote, by recognizing digital assets in law, the UK is giving consumers clear ownership rights, stronger protections, and the ability to recover assets lost through theft or fraud, Gurinder Singh Yosan, co-chair of the Crypto and Digital Assets All-Party Parliamentary Group, told CoinDesk. The royal assent, the royal nod, as it were, was formally announced in the House of Lords around 2:30 p.m. Tuesday, marking the moment the bill became law. Earlier this year, the UK lifted its 4-year ban on retail access to Bitcoin and crypto ETNs, allowing firms to offer the products on FCA-approved exchanges. After the ban, BlackRock then launched its fully backed iShares Bitcoin ETP, the IB, the number 1 T, so IBIT, but I is replaced by the number 1, on the London Stock Exchange. And meanwhile, the UK government is reportedly weighing a ban on crypto donations to political parties as it drafts its upcoming elections bill, according to people familiar with internal discussions. The move would directly affect Nigel Farage's Reform UK, which became the first British party to accept digital asset donations and has already received several. So my question, and that's the end of the article, my question is this: how can you, as a government, recognize a thing as property and then deny the allowance of possession of said property? They seem to want to deny Nigel Farage, and it doesn't matter what you think of him. It really doesn't. Here you got a law that says crypto is property, but you can't, if you're this particular kind of person, you can't take that property. They'd allow Nigel Farage to take British pounds, or euros, I suppose, but not Bitcoin. No. I call bullshit. That's complete bullshit. But in either event, the UK not only has it recognized Bitcoin as a digital property and given it property rights, but they had to build a third basket of property. They got the standing property, they got the property in action, and they've had that, like the article says, probably since the Middle Ages. This would be the first time in UK history that a third kind of property has been defined into law in the UK. And honestly, this could have been anything. It didn't have to be Bitcoin and digital assets or whatever. It could have been something else. Let's say that Bitcoin didn't even exist. This is a profound change in the property legislature in the UK that hasn't been seen since the Middle Ages. I find that, I think that this is really profound if you look at it sans Bitcoin. I mean, they've had two kinds of property legally defined in the UK since the Middle Ages, but not as of today. Because as of yesterday at 2:30 p.m., I suppose their time, King Charles gave his royal nod, and all of a sudden, boom, a third kind of property now exists as a legal structure. And it doesn't matter if it's Bitcoin or not. I think it's profound. It becomes more profound because it is about Bitcoin and digital assets. However, because for the mainstream media, because it's Bitcoin and digital assets, the profundity of this issue is probably not really going to be talked about. And I can bet you my bottom dollar that 80% of the citizenry of the UK will not even know that they now have a third kind of property. And they probably won't know for like 10 years. It'll be interesting to see what else falls into this basket. But hey, good for the UK. Let's move on to the rest of Europe, where 10 European banks are set to launch a euro stablecoin by the year 2027. You're too late. I'm just saying, you're too late, man. You're too late. Your lunch has already been eaten You just don't know it yet. Atlas21.com. A group of 10 European banks has announced plans to launch a euro stablecoin in the second half of 2026. The initiative is taking shape through Keyvalis, an Amsterdam-based entity formed by the 10 banks. BNP Paribas is among the participants and confirmed its involvement in an official statement. The goal is to create a stablecoin fully compliant with MiCA regulatory framework, the EU's digital asset regulation. Jan Oliver Sell, the CEO of Keyvalis, highlighted the strategic importance of the project. Quote, a native euro stablecoin isn't just about convenience. Oh, no. It's about monetary autonomy in the digital age, presenting new opportunities for European companies and consumers to interact with on-chain payments and digital asset markets in their own currency, end quote. The launch is subject to regulatory approval from the Central Bank of the Netherlands. Okay. How important is the Central Bank of the Netherlands then? This is 10 European banks. Are they all in the Netherlands? I don't think so. So what's going on with the Central Bank of the Netherlands? Why are they so important? Oh, well. The project comes amid an evolving regulatory landscape. While Europe progresses with the MiCA framework, the United States enacted the Genius Act, establishing a regulatory framework for payment stablecoins. Signed into law by Trump in July of 2025, this legislation represents the first structured U.S. effort to regulate the sector. Monetary authorities have expressed concerns. Well, no shit. Really? You think? Olaf Stelfler, governor of the Central Bank of the Netherlands, apparently very important bank, reportedly raised doubts about potential monetary policy risks stemming from the expansion of the stablecoin market. The European Central Bank, there you go, the European Central Bank has taken a more cautious tone. In a report published in November, the ECB stated that risks associated with stablecoins are likely limited, while noting that, quote, their rapid growth warrants careful monitoring. Yeah, I brought you that story a couple of weeks ago. According to Jürgen Schaaf, an ECB advisor, euro stablecoins had a market cap below 350 million euros, representing less than 1% of the global market as of July. So there you go. So we got 10 European banks that are collaborating together on release of a single stablecoin, which would be, I guess, pegged to the euro. However, there is some fuzz here. Again, I got to come back to it. Why the Central Bank of the Netherlands seems to be leading this charge and not the European Central Bank, that one raises the hackles on the back of my head as well. What's going on there? Why is Central Bank of Netherlands so important? If you happen to live in the Netherlands and you would like to give me a big old boostagram for the show to help support the Bitcoin and podcast, let me know why the Central Bank of the Netherlands is so freaking important that they're the ones that are spearheading the release of a euro stablecoin. Please do that. I really want to know why it's not the European Central Bank that is more involved. Why is it the Central Bank of the Netherlands? Whatever. Speaking of hackles being raised, let's go to Binance, where they've made a big announcement. From the block.co, written by James Hunt, Binance appoints the co-founder Yi He as new co-CEO alongside Richard Tang, the current CEO. Co-CEO. That right there. Why do you need a co-CEO? You have a chief executive officer. You might have a vice chief executive officer, but you don't. It's like the president. We don't have two presidents in the United States. We have a president and we got a vice president. You got a CEO, and then you got the rest of the C-suite. Chief operating officer, chief financial officer, chief investment officer, chief marketing, chief bottle washer. Who knows? Co-CEO. I don't know, man. Something's wrong about this. Anyway, Binance has appointed the co-founder Yi He as its new co-CEO in the biggest change to its leadership structure since Richard Tang stepped into Changpeng Zhao's shoes in November 2023 following U.S. enforcement actions. Tang, who will continue to serve alongside Yi He as co-CEO, announced the news at Binance Blockchain Week in Dubai on Wednesday amid claims that the crypto exchange giant is now closing in on 300 million users. Yi He previously held the role of Chief Customer Service Officer. I never even knew there was such a thing. At Binance, according to her LinkedIn page, having been involved in the company's operations for over 8 years since it was formed in 2017, quote, Yi has been an integral part of the executive leadership team since the launch of Binance. Her innovative and user-focused approach has been instrumental in shaping the company's vision, culture, and bottom-up business strategy, Tang said in a statement. And he continues, quote, this appointment is a natural progression, and she will continue to guide the organization from strength to strength. Another quote, I am honored to build alongside Richard, who brings decades of experience in regulated financial markets and was among the first to regulate crypto in its early days, Yi He said. She continues, saying, together, we bring diverse perspectives and are confident in leading the future of the industry during this pivotal time. And we responsibly expand our global, or as we responsibly expand our global presence and drive sustainable innovation with our users always at the center. Holy shit, who trained this chick in suit speak? Again, I read you probably 3 to 4 sentences and all of them say nothing. God, I freaking hate suit speak. Put a tie on it and hang it from a limb. Anyway, fellow Binance co-founder Changpeng Zhao. Well, he took to X to congratulate the new co-CEO. Now, hold on to your pants for this one, guys. Here's the quote. Yi He should have been the Binance CEO from day one. Great journey ahead with 2 strong leaders with complementary skills leading Binance. Okay, so you just threw Richard Tang under the bus. This is the guy that stepped in to take over your shoes because you weren't allowed to have a goddamn thing to do with Binance, but yet it should have been Yi He. It should have been her that should have been CEO of Binance from day one. Does that mean that she should have done it instead of you? You would have, at the early days of Binance, you sure as shit would have been able to actually make that happen, but you didn't. So why is it just now that she should have been the CEO, not the co-CEO? That's not what he said. What he said was the head honcho. The buck stops with her. The CEO should have been her from day one. How do you think Richard Tang feels about that? Honestly, all of these people need editors. You can't do that again. This is like the Fong Lee, Michael Saylor bullshit going on over at Strategy. Somebody get these 2 people into a room and get them all on the same frickin' page just once. Just once. That way you won't have to write silly ass suit speak statements because you don't know where your actual loyalties lie. God, for God's sakes, fellow... Sorry, it's just... This makes no sense. It doesn't make any... What the hell's going on at Binance? That's the bottom line here. But let's continue with this charade. Yi He and Zhao have known each other since at least their OK Coin days. God, that was a long time ago. Becoming both business and life partners. Ooh, and having children together. Oh, God, as if it couldn't get any thicker. The plot thickens again. They became both business and life partners and having children together. He previously described Zhao as a comrade in arms, comparing the relationship to that of a college roommate. It's just, you can't write this shit. In October, speculation rose on a potential return for Zhao to a leadership role at Binance amid reports that Trump was considering a pardon for the former CEO. However, no decision has officially been made. Yeah, well, the pardon sure as shit was made, so I fully expect Changpeng Zhao to roll back in, and maybe that's why we're getting a co-CEO to Binance. Maybe, and maybe it's happening quicker than anybody wants, which is why we get bullshit suit speak statements. Nobody seems to be on the same page. The founder, the freaking founder of Binance himself, throwing his own CEO under the bus, and then turns out that it's his ex-girlfriend. Oh, and baby mama that he's installing as co-CEO alongside Richard Tang, and then saying, oh, she should have been it. She should have been number one all along. Does this sound like a cohesive leadership team to you? It doesn't to me. One of the worst things that you will ever do is have babies with one of your employees, whether she's a co-founder or he's a co-founder or not. And then it's a worse idea to continue working right alongside them where you're actually having to engage daily to make active decisions. Because God forbid, what if you have a falling out? What if you get divorced? What if all of a sudden you end up hating each other? How is that work dynamic going to play out? It doesn't. Ask me how I know. And I wasn't actually the one in a working relationship. I was working at a company that had one of those, and it is a fucking freak show. All right. It is a freak show, and nobody should engage in that, which is exactly why human resources, love them or hate them, and most people, including me, hate HR. They do have one standing rule. You do not form relationships with your coworkers. There's a reason for that. And when hundreds of billions of dollars are on the line, representing several countries around the world, you don't want to have anything to do with this crap. This is a bad decision on the part of Changpeng Zhao, Richard Tang, and Yi He herself. All three of them are complicit for allowing a goddamn circus to grow up around a dumpster fire. I digress. Do you want some HODL butter? Because you only got one of the original HODL butters, and then there's a HODL butter bundle. Let's see. And this is from OshiGood.us, because it's the Circle P. It's where I bring plebs with goods and services just like you to plebs just like you who want to buy said goods and services with Bitcoin, because if you're not selling your goods and service in Bitcoin, you ain't in the Circle P. But OshiGood.us definitely sells all of his goods and services in Bitcoin. In fact, he doesn't even list prices in US dollars. He prices his goods in sats. And this one is the HODL Butter Bundle. 1 16-ounce OG HODL Butter and 1 16-ounce Crunchy Coffee HODL Butter. Best of both worlds for fewer sats. Recommended pairings. Have it on dates. Dip it in banana or dip bananas in it. Steak and eggs. I know it sounds weird, but dude, give it a try. You can put it on chicken. You can have vanilla ice cream with it. But honestly, best enjoyed straight from the spoon. If you open one of these, keep it refrigerated, please. Just he doesn't use preservatives. He uses pecans, maple sugar, sea salt flakes, cinnamon, black pepper, and for the crunchy coffee one, he adds roasted Arabica coffee grounds. So get you some today. Make damn sure that you tell him using code Bitcoin and that you heard about it here on the Circle P. You can pick up both of these for 56,000 sats. Believe me, man, I've got some of this stuff. It is freaking awesome. Oh my God. Go to OshiGood.us. That's OshiGood.us. Use Bitcoin and in the coupon code. That lets Oshi know that I made a sale for him and he can get me back on the other side with some Satoshis. white-collar fraudster has been jailed in the United Kingdom after converting $650,000 of company funds to crypto. Sounds familiar. I did a story like this a couple of weeks ago, but this one's different. And it's written by Simon Chandler from decrypt.co. A British man has received a 33-month prison sentence after being found guilty of embezzling over £500,000 from his employer and converting the stolen money into cryptocurrency, which he used on gambling websites. 30-year-old Jason Lowe from Skipton in North Yorkshire had worked at the same Lancashire-based firm since 2016. But between March of 2023 and February of 2024, he ended up siphoning off the funds in order to feed his gambling addiction. That's why I'm telling you, don't get into gambling. If you don't gamble now, please, for the love of God, don't start. Otherwise, you're going to end up like Jason Lowe. Structured as an employee-owned trust where staff benefited from profit rewards, the unnamed company first detected that something was amiss when its finance department spotted an unusually high volume of payments to two businesses, Meteor Brand and PPC Guru. Lowe's bank also flagged large sums of money entering his personal account, including payments via PayPal. Yet, when questioned by the bank, he said that the sums were from the sale of his business, which had been completed in 2021. The Lancashire company's investigation initially aroused internal distrust, conflict, and stress among staff members, with Lowe avoiding guilt for a period by the use of lies and false accusations. However, the company submitted an action fraud report in February of 2024, which led to North Yorkshire's Police Economic Crime Unit beginning its very own investigation. Lowe finally pleaded guilty to fraud by abuse of position of trust on Friday and was sentenced at Bradford Crown Court to 33 months in prison. A hearing under the Proceeds of Crime Act will take place at an as yet undecided date in order to begin the attempt to recover those stolen funds. And speaking in a press release, Detective Constable Neil Broadhurst of NYP's Economic Crime Unit said that the force is pleased as punch with the sentence handed to Lowe. Quote, even though the stolen funds were converted into cryptocurrency, we were able to trace the transactions and prove how he benefited. Fraud is never a victimless crime. And in this case, it highlights the wider ripple effect of Lowe's actions. It undermined morale, trust, and financial stability across a workforce, end quote. While figures on this particular area of crime remain limited, experts suggest that white-collar crime involving cryptocurrencies is becoming more prevalent, with financial crime tending to follow the money. This is the view of Phil Aris, a former crypto lead for the National Police Chief's Crypto Cybercrime Program and now the director of UK Public Sector Relations at TRM Labs. He told Decrypt, quote, we're seeing more cases where trusted insiders misuse access or company funds to route value into crypto for personal trading, gambling, or straight up laundering, patterns that closely mirror the rise in traditional insider fraud during periods of market expansion or volatility. According to Aris, crypto is increasingly just another rail being used by inside abusers who can make things difficult for their employers by using multiple rails at the same time. A key challenge faced by firms is deliberate commingling, he said, explaining that it involves blending stolen funds with legitimate funds such as payroll, reimbursements, or vendor payments before rapidly moving them across exchanges, stablecoins, bridges, or obfuscation tools such as coin mixers to blur their provenance. While the underlying cryptocurrency activity remains traceable, Aris explains that many employers and organizations remain underprepared for crypto-related white-collar fraud. Quote, self-hosted wallets, rapid swaps, cross-chain movements create blind spots when policies, approvals, and monitoring haven't been updated, he explained, before adding that many companies Well, they just haven't really kept pace with crypto adoption at all. And this failure to keep up with crypto has left gaps in terms of how firms deal with internal access controls, cryptocurrency wallets, and conversion of company funds into digital assets. However, while there also remains regulatory gray areas around crypto-related insider trading and white-collar crime, Aris affirmed that the transparent nature of crypto may ultimately enable the rapid and effective detection of criminal activity. He explained, quote, "The key is operationalizing that transparency by equipping finance and audit teams with blockchain analytics, strengthening transactional controls, and ensuring real-time anomaly detection is part of the compliance toolkit." So that's the end of the article, but that's not the end of the crime, because this article brings up a very, very good point, a very salient point. Remember how I always talk about this. For 10 years, banks were basically pointing at us and laughing instead of wrapping their head around how all this shit works. And now all of them are behind, and they have to rest on their laurels of the knowledge of regulatory arbitrage and regulatory moating to be able to buy enough time so that they can finally get up to speed. It's like the high school kid that's got a term paper due. He's had 6 weeks to work on this term paper. When does he actually decide to write it? The night before. Is it going to be good? No. Is it going to get a passing grade? Probably not. But it's the same deal here with companies this time. It's not banks. It's not the high school student. It's private companies. Think about it. If it took this long for banks, both small, medium, and large, to start going, this shit's not going away, we got to wrap our heads around it. How far behind do you think companies are? Big, medium, and small. How many more companies are there than big banks? A lot more. I'm going to answer the question for you. A lot more. So where's the opportunity? Become their crypto expert. Become their Bitcoin guy. Figure out this is untapped territory, ladies and gentlemen. If you wanted to work in the industry, this might be the best way to start doing that. Start working a resume that looks like somebody who can help a company that doesn't know anything about this shit with this shit. And then go take one step further and become bonded. Say I put up a $5,000 bond so that if I screw you, if I screw you and it's illegal, not only am I on the hook for that, but I lose $5,000 on bond. Because I bonded myself. That, honestly, I think why bonding? Because this would be a brand new kind of position in any company. Banks, they're filling their coffers with people who know what the hell's going on. But now we're at the level of companies. And they're going to need support too. They're going to need somebody who can actually talk to their audit teams, their finance guys, their investment guys. They're going to need somebody that they can put into a room and start massaging that big brain and have answers fall out. And right now, I don't see that happening. Clearly, in this article, it didn't happen for these guys. These guys are completely unaware. The one dude that would have been able to fill that position was the one dude that fucked him. Now, take that, build it into a resume, go get bonded, because that way, when you present yourself as somebody who can help in these, quote, turbulent times, you can say, give them your resume, and they say, well, how would we know that you wouldn't just steal from us? I got a $5,000 bond I put up. Here's the receipt, or whatever it is. Here's the bond. Show them the bond. I'm James Bond. Here's the bond. They go check it. Sure enough, you put up $5,000 as a bond. Maybe you put up 15. I don't know, how much money that you think that it would be worth. Then all of a sudden, they've got a resume in their hand, and they've got somebody who's not bullshitting them. You put up a bond. It doesn't mean that you won't ever do anything against them, but it sure as shit does take a lot of chaff out of that grain pile, doesn't it? Well, think about it. Meanwhile, let's run the numbers. CNBC and whoa, Nelly, natural gas going above $5 per thousand cubic feet. Haven't seen that price in a long time. That's after a 3.39% spike in natural gas prices. Brent North Sea is up a fifth of a point to 62.57. West Texas Intermediate floundering under $60 again after a third point increase to 58.86. Gasoline down a third to $1.82 a gallon, and Murban crude is up a third to 64.45. Metal rocks having a good day. Palladium is up a half point. Gold is up over a third to 42.36 and 9 dimes. Platinum is up over a point. Silver is up a third to 58.92. Copper is up 2.86%. Ag is mostly in the red. Cocoa is the only one in the green, 1.04% to the upside. And let's see here. Biggest loser is rough rice, 2.13% to the downside. Live cattle is up a half. Lean hogs are up 0.87 and feeder cattle are up a half as well. The S&P is up a third. NASDAQ is up 0.15. The Dow is up almost a full point. 450 points to the upside. Well, units. When I say points, I should actually say percentage points. And when I say that the Dow is up, 449, that's whatever. I would rather just use percentage points because it actually tells you more than, oh, the Dow is up 500. That's why when I do this, that's why I use percentage points, because the Dow's up 500 literally means nothing to me. It's up, over a point. That means something to me, a percentage point. Now, S&P Mini is up 0.73%. Meanwhile, Bitcoin had gone past 93,000 earlier this morning, but it's back down to 92,860. That's a $1.85 trillion market cap. We can purchase 22 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,956,976.16 of, an average fees per block are, well, average 0.03 BTC taken in fees on a per block basis. 32 or so blocks carrying 89,000 unconfirmed transactions waiting to clear at high priority rates of 6 Satoshis per VByte. Low priority gets you in at 4. 1.06 zettahashes per second is the current hash rate of the Bitcoin network. It is more security than you will ever need, and we remain in zettahash territory. From Electric Money, yesterday's episode of Bitcoin And, I got Jason High with 200 sats says, why was the mushroom the life of the party? I don't know. Jason, tell me tomorrow. Paul Surnine, 500 says, thanks for another episode. Love your rant on carbon. It really needs to be said much more often. We're really doing ourselves a major disservice by focusing on only the downsides of carbon. The upsides by far outweigh them. Yeah, no shit, Paul. That is absolutely freaking true. And we never talk about that, do we? I agree wholeheartedly here. Continuing, but it seems to me that the powers that be profit more from climate emergency talk than from working on solutions for humanity. But don't get me started. I'll see you on the other side. Yeah, I was having a discussion with somebody earlier today about this kind of shit. And it dawns on me, and well, I've known this for a long time, but I was finally able to wrap my little bitty head around it. Like, for those, like, let's take a sensitive topic, LGBTQ+. You go to any conservative and most rational people, unless, well, I had said rational. Let me say most mainstream people who are watching mainstream news, and their lips will curdle at LGBTQ+. Right? Why? And the answer should be somewhere around, I'm tired of it being forced down my freaking throat. Man, dude, more power to you, pal. I hear you. I hear you. However, think of it this way. That's false narrative. That's what we're being fed by the media because it's clickbait. Check this shit out. There have been several people that I've known throughout my life that either present as gay or lesbian or something along the bisexual or something in the LGBTQ thing, right? They're normal people. I mean, when you talk to them, they talk about normal shit. You know, some of it, like right now, the environment's really charged politically, so they probably all hate Trump, but that's, again, for the reason I'm coming up to. I'm talking about back in the day, like, 5, 10, 15 years ago. They're normal people. Unless they told you, or unless you saw them out with their significant other, you wouldn't think that they were gay or bisexual or whatever. They dressed normal, they looked normal, they did normal things, they went normal places. They were just... they just want to be left alone. They want to be like the rest of us, man. They just want to be left alone. And they don't do weird shit, and they don't scream, and they don't yell at you for being a man and all that, all the shit that's being presented to us by the mainstream media. And then it dawned on me. That shit's done on purpose. The people that you see on TV from the LGBT community are put there for a fucking reason. To keep the reds fighting the blues. It's about distraction. It's about getting people riled up. It's about getting people to look at anything other than what they're doing with the money and what they're doing with privacy and what they're just basically, I don't know, whatever else it is that those assholes do. They get a bunch of people. They say, hey, here's your script. And I get my script. Oh, I'm going to be gay today, but I'm supposed to be angry. I'm supposed to be malicious, and I'm supposed to hate Trump, and I'm supposed to do it very loudly. Yeah, buddy, you got your part. Now go do that. Go to the protest, go everywhere, and make sure that you get as far close to the cameras as you possibly can, because we need your face screaming utter bullshit at the people of the United States so that they have a reason to be mad. And stay mad. What I'm getting at is the people, all this LGBTQ stuff that's driving everybody fucking lunatic shit, like, drag queen story hour, that's not, yes, it's real insofar that it was designed. It wasn't an organic manifestation. It wasn't like all of a sudden drag queens woke up and said, you know what? I think I want to go read stories to children. The real ones, the ones that aren't fucking psychos that have been turned into like weird idiot poster children for everything that you hate by the mainstream media, those people, you wouldn't have even known unless they were in drag. You wouldn't have even known because they weren't being weird. What we're being presented with, whether it's LGBTQ stuff or climate change stuff or universal basic income crap or pizza will, an entire pizza will feed like the entire world. Whatever stupid bullshit that we've been hearing, the actual people that talk about these things from an intellectual standpoint that are not on the news are actually fairly normal people. Even if you disagree with them, they make, they at least try to make an argument without telling you that you're a woman-hating misogynist. Right? Same thing with climate change. The people that really understand carbon, you will never see them on TV. You will never, ever, ever see them on TV talking about the good side of carbon because A, it doesn't get clicks, and B, it doesn't sow dissent into the masses. And you can literally do that with every goddamn thing that is on the news that is causing regular citizens to battle with each other. Whether it's race, whether it's carbon and climate, whether it's money, whether UBI, whatever, pick one. And the same shit happens. The reasonable people that think about it, or the reasonable people that think it's a good idea, even if they're wrong, are reasonable about it. But what you see is the unreasonable. And that's all you will ever see. I guarantee it. And it's that way for a reason. Let's continue. Thank you, sir, with 500 says, for those interested, I transcribed and uploaded the short newspaper article on Henry Ford's energy money idea. It's It's posted to highlighter.com and can be found via my profile, Steve B, all one word, Steve B at iris.to. That's Steve B at iris.to. Thank you, sir. Good talk. P.S. They killed Bitcoin, those bastards. Yeah, I know, man. I hate them all. Nick Dose with 113 says cheers. Pies with 121 says thank you, sir. No, thank you. And I think is that it? Yep, that's the weather report. Welcome to part 2 of the news that you can use. NASDAQ starts us off by pushing supersized trading limits for IBIT options by 4x. What could possibly go wrong? Maybe Nima from Bitcoin News will tell us. NASDAQ is asking U.S. regulators for permission to greatly increase the trading limits for options tied to BlackRock's Bitcoin ETF, the IBIT. This change may sound technical, but it is one of the biggest steps in bringing Bitcoin fully into traditional finance. NASDAQ's International Securities Exchange wants to raise the position limit for IBIT options from 250,000 contracts to 1 million contracts, and right now, the limit is too small for large investors who need to hedge or manage risks. NASDAQ says the current limit is now restricting market makers and institutional desks that depend on options for hedging and yield strategies. Okay, well, from that context, it does kind of make sense. But again, there's always going to be a gotcha with these things. Interestingly, less than a year ago, that limit, the contract limit, 25,000. And then it was increased once by 10x to 250. And now NASDAQ wants to quadruple that limit. If approved, IBIT would join the same tier as some of the biggest ETFs in the world, products like SPY, QQQ, and EEM. That means Bitcoin would officially sit next to major stock market giants in terms of trading capacity. IBIT options trading has grown very quickly. In 2025, NASDAQ says demand is rising so fast that the old limits are now holding back the market. Some analysts say big trading desks cannot properly hedge their positions with such a low cap. Analysts say that raising limits is normal when an asset becomes highly traded, highlighting that these adjustments are normal once an asset proves it can handle real volume. Raising the limits would help tighten spreads and improve overall market efficiencies. NASDAQ also stressed that even if someone used all 1 million contracts at once, it would still only be 7.5% of the ETF's shares and 0.284% of all Bitcoin in the world. That is too small to pose a serious risk. Yeah, well, never say never. The exchange is also asking regulators to remove limits on flex IBIT options, which are custom options used mainly by bigger institutions. This would match the rules used for gold-based ETFs. Analyst Adam Livingston, contributor at Bitcoin for Corporations, said that IBIT is now trading like a mega cap asset. Quote, "This is the moment every banker secretly fears. You don't scale options by 40x unless you know demand is about to detonate." The change also opens the door for new financial products with higher limits. Banks can start offering structured products, yield-based instruments, and other Bitcoin-linked investments for clients who might never buy Bitcoin directly. The market reacted quickly to the news. Bitcoin options open interest jumped by $4 billion in a single day, reaching $62 billion. Bitcoin's price also bounced back sharply, rising to the $90,000 to $92,000 range after weeks of fear in the market. Bitcoin advocate Max Kaiser thinks the new limits are bullish. He highlighted the increase of the limit by 40x since last year, adding that a new all-time high is now in play. He said, quote, "I said a year ago the next Bitcoin pullback would come when market hit size barriers. for market makers. That problem is now solved with a 40x increase in options contract size. So 40x, what they're talking about is that over the year, this move by NASDAQ only wants to multiply it by 4, not 40. But if you take into consideration that the original contract size was 25,000, and then NASDAQ, and I didn't even see this news, NASDAQ multiplied it by 10x, and then now they're going back and saying we need to get 4x on that, then yeah, within the year, you're talking about going 40x for these contracts. If I was more of a, if I had went to business school and majored into finance or something like that, I would probably realize just how big that is. But for me, being the pleb that I am, I just buy Bitcoin and hold Bitcoin. Maybe Horeb Energy and Viola are mining Bitcoin and keeping it because they're only paying 2.5 cents a kilowatt hour with Colombian landfill biogas. This is Juan Galt out of Bitcoin Magazine. Colombian Bitcoin and crypto mining company Horeb Energy reveals 2.5 United States penny cost per kilowatt hour of green biogas energy in the North Santander region of Latin America. And that would be Colombia. The company has achieved energy prices 50% lower than the North American average of 3.5 to 6 cents per kilowatt hour for Bitcoin mining. Authorized in 1853 by Napoleon III to help build out public waterworks infrastructure in France, Viola, or Violii, it's hard to pronounce, is a global leader in environmental services focused on water, waste, and energy solutions. And today, in Norte de Santander, Colombia, the company operates critical facilities dedicated to biogas valorization and solid waste management, a common problem in Colombia and Latin America in general, known for its massive landfills. Veliola, or however you pronounce it, also operates the Centro Inteligente de Gas or Gestación Ecológica. God, that is a mouthful. It's a landfill, and it's a pioneer in biogas system development in the region as well. Now, Horeb Energy, the Bitcoin mining arm of that operation, specializes in technological solutions for biogas treatment and renewable energy production from waste. Quote, it's collaboration with Veolia in this pilot project that sets the milestone for new sustainable business models in the global cryptocurrency mining sector. The project aims to reduce the region's carbon footprint, significantly, and demonstrates Veolia's strong commitment to accelerating the ecological transformation of local territories. Through the pilot project, biogas generated at the CIGE Guyubal landfill by Veolia is transformed into electricity to supply a secure standalone data center dedicated to cryptocurrency mining. Horeb Energy oversees advanced biogas filtration and energy conversion processes and the Bitcoin mining dimension, which unlocks new economic models for energy infrastructure development in the region. 1 year after the launch, the program boasts tangible results with the production of nearly 1,000 kilowatt hours of 100% renewable energy, powering an entirely off-grid Bitcoin container and mining system. This unique approach in the Colombian market provides an alternative use for methane gas, a byproduct of waste decomposition that poses environmental challenges for landfills. Humberto Posada Cifuentes, general manager of Viola in Norte de Santander, said in a press release that this pilot demonstrates that with innovation and strong local leadership, we can turn waste into value and contribute meaningfully to the clean energy transition. Arle Lozano, operation manager of Horeb Energy, told Bitcoin Magazine that they had achieved 2.5 pennies per kilowatt hour in green energy, adding that we are proud that this project has been developed by local talent in partnership with the French company. Our goal is to replicate this model in other municipalities across Colombia and throughout Latin America. Why is it not an American company? Were we just resting on our laurels? We're letting the Frenchies in, man. We don't want those frogs over here. No, I'm just kidding. You guys in France have some really good croissants. Now, on to strategy. Well, Michael Saylor is kind of bitching at MSCI, and he's doing it by saying that strategy is engaging with this potential MSCI exclusion. Are they engaging directly? I don't know. Helen Parks, help us out from Cointelegraph. Michael Saylor's strategy has not given up on its efforts to keep its common A stock part of the MSCI indices after the stock entered the MSCI World Index during the Bitcoin rally in 2024. Amid MSCI Global Standard Indices holding consultations on whether to delete MSTR and other digital asset treasury companies from its indices, Strategy Saylor said the company is communicating with the index provider about the issue, according to Reuters. Quote, "We're engaging in that process," the strategy founder said, adding that he was not sure about the accuracy of JP Morgan's reported estimations that a potential exclusion from MSCI could trigger $2.8 billion of outflows. Now, no shit. MSCI initially announced the addition of MSTR into its indexes May of 2024, so just last year. And they're already trying to figure out a way to get out of it? I don't know, man. I smell fear. And it smells like victory. Anyway, the stock became one of the 3 largest additions to the MSCI World Index when they did include strategy. Launched in 1986 by its original operator, Morgan Stanley Capital International, the MSCI World Index is a widely followed global stock market index that tracks the performance of more than 1,300 large and mid-cap companies across 23 developed markets. Among its top constituents, the MSCI World Index includes tech giants like NVIDIA, Apple, which together account for more than 10% of that one index. Strategy's MSTR became part of the MSCI World Index in May 2024, about 3 years after the company began accumulating Bitcoin as part of its digital asset treasury strategy, by which point it had hoarded only 214,000 BTC. And then after a booming in July of 2025, many digital asset treasury companies, including Strategy and other companies like Japanese Metaplanet, have been struggling with stocks plunging to multi-month lows. Yeah, multi-month. Got short time horizons all over the place here. By mid-October, Metaplanet's enterprise value dropped below the value of its BTC holdings, marking unprecedented developments with significant implications for the broader DAT sector. That's digital asset treasury. On October the 10th, MSCI issued an official announcement on potential exclusion of DATs from its indices, with the consultation remaining open until December the 31st, 2025, with final conclusions coming January the 15th, 2026. Addressing the question of DAT's stock volatility, Saylor said that equity is going to be volatile because the company is built on amplified Bitcoin. Quote, "If Bitcoin falls 30-40%, then the equity is going to fall more because the equity is built to fall," he reportedly said on the sidelines of a Binance event in Dubai on Wednesday. Ooh. These people seriously need to keep their mouths shut. On Monday, Strategy launched a $1.44 billion US dollar reserve to support dividend payments on its preferred stock. Yeah, that's like I said yesterday, they're doing that to assuage the fears that Fong Lee sent through the market after he opened his big ass mouth. It just never ends with these people. But hey, at least Saylor's, got him on the phone and saying, "Hey, well, what's the deal, dude?" And it would honestly, for MSCI, that would actually be kind of a leadership fail. You put them in May of 2024. Here it is, December of 2025, and you're already trying to figure out a way to eject them? What the fuck was wrong with your decision-making processes back in May of 2024? I'm sorry, man. I don't buy it. I smell fear. Fear smells like victory, or at least in this context. Now, on to Anthropic and our last story of the day. They have started early IPO preparation ahead of possible 2026 debut, according to a report. Vince D'Aquino, take us out. Anthropic has reportedly begun formal initial public offering groundwork by tapping Wilson Sonsini, a U.S. law firm that has advised it since 2022 as it weighs a possible listing as soon as next year, and looks to test whether public markets could be ready for an AI lab still deep in capital-intensive growth. The AI development company has reportedly engaged the firm while holding early informal talks with major banks, according to an initial report, and estimates from sources vary, with one person saying Anthropic could be ready by 2026, while another cautions that doing so remains very unlikely. An Anthropic spokesperson cited in the report said that the company has not made any decisions about when or even if they go public. So it looks like they're just exploring the idea at this point. The same report indicates that Anthropic appears to be tightening internal readiness as it pursues a private round that could lift its valuation to over $300 billion, with early commitments totaling at least $15 billion from Microsoft and NVIDIA. In most recent money or post-money valuation was pegged at $183 billion in September. Based on the West Coast, the law firm has advised Anthropic for 3 years and has also worked on advisory roles for other major tech IPOs, including Apple in 1980, and then again in 2004 when Google went to the market. Decrypt has reached out at no comment so far. The move positions Anthropic alongside other major AI labs such as OpenAI in exploring a path to the public markets, though both face the same constraint: training costs that scale faster than revenue, and financial forecasts that remain difficult to anchor even as investor appetite for frontier AI bets continue to rise. Quote, an IPO by Anthropic as soon as 2026, if realized, would dramatically tighten the competitive pressure among major AI labs. Ram Kumar, core contributor at blockchain and AI infrastructure firm OpenLedger, said, once sealed, it could formalize valuation expectations, push capital markets to assign public valuations to AI output, and likely trigger a rush of IPO and exit plays across the sector. So there would be a reshuffling of positions being made almost immediately. For investors and enterprises, this could mean that AI will increasingly be seen not just as a research cost, but as an investable asset with tradable equity, quantifiable growth targets, and public scrutiny. Still more broadly, the timing for Anthropic's public debut raises critical questions. Oh my God, the humanity. Quote, the biggest risk is valuation distortion. Large public market expectations may incentivize speed over substance, pushing labs to prioritize growth metrics over data quality, safety, transparency, or long-term infrastructure, all key pillars of a trustworthy AI ecosystem. Oh, bullshit. There's no such thing as a trustworthy AI ecosystem. Not because it's AI, but because the ecosystem hasn't developed to figure out what trustworthy even looks like. This is a misuse of that word in this context, and I will have none of it. Continuing, yet given how data feedback loops and scale tend to concentrate power, there is possible danger over how public market pressure could accelerate consolidation, reduce diversity of models, and entrench a small number of dominant players. He said, quote, an IPO-driven race can deliver capital, but it won't by itself guarantee fair distribution of value, traceability, or long-term ecosystem health. We need fair growth where contributors are recognized and rewarded, and where intelligence becomes a collectively owned infrastructure rather than a private plaything of a few. So this guy's Kumar is weighing on the whole intellectual property, and he's getting a little socialist on us. It doesn't matter, man. There are so many of the highest quality models that keep getting released to places like Hugging Face You can go grab your own. Now, you'll have to host it yourself, but most of these are pre-trained, right? You won't be able, I mean, if you want to spend the money, you can get one and train it yourself. And I don't know how many models have already been trained, but have remained open for training so that you can train it further. But still, my point is that we do have an ecosystem. When it comes to these public companies, there's no such thing as trustworthiness. But as far as Kumar and his socialist bent here with intellectual property, dude, there is enough AI out in the wind right now to fuel a small army to do whatever it is that they feel that they need to do. All right, well, that's the last of the articles that I have today for you here on the Bitcoin and Show. Please consider, giving me boostograms. And if you can't just straight up donate to the show. Oh, by the way, I've got something here for you. Let me see. Let me go to monetization. I'm over here on my podhome.fm page. That's my podcast host. So I'm going to go to they just recently released hosting pages for the people that are host of podcast on their platform. And mine is support.podhome.fm/Bitcoin and support.podhome.fm, support.podhome.fm/Bitcoin and you can actually straight up give me like USD. Donation amounts are set at $3, $5, $10, $20. You can opt for a one-time support. You can do recurring. You get a chance to give me a message. You can enter your name, or I guess you can call me a name, but you can put in your name and you put in a message. It's at support.podhome, POD, home.fm/Bitcoin and Go support the show. Go support the show. Help me out. Help a brother out, man. Bring you as high quality news as I possibly can. Also, by the way, I believe, hold on. I have to say this. So hold on. Well, poop. I can't find the particular vendor for the Circle P, but this kind of goes out for all the vendors of the Circle P. If you are buying Christmas gifts from any of the vendors at the Circle P, you need to check with them as to when you're going to get your shipment, because things are a little hairy right now. You got a backlog at USPS because of the federal government closure here in the United States. You've got Christmas backlogs for UPS and FedEx anyway. That always happens every year. So for like all my vendors, the Permanerd, Permanerd, Oshi, Soap Miner, Great Ghee, Bitcoin Beans, get your orders in right now. A couple of these guys have said you've got to get your orders in by December the 13th. Otherwise, you're not going to get your stuff by Christmas. All right, so all of my vendors, Soap Miner, Permanerd, Oshi, Great Ghee, Bitcoin Beans, get your orders in for gifts ASAP, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.